Hi, and today we are going to look at the IPRO Zar trading robot. This is currently on the front page of the Metatrader marketplace, meaning it's currently one of the most popular trading robots, so I thought it would be worthwhile taking a look. This trading robot is for Metatrader 4 and it only trades the euro-dollar on the 30-minute time frame. Looking at the product description page, we can see that it says it doesn't use grid, martingale or other dangerous strategies. That's not strictly true. More on that later in the video. There's also the bit which says that there's no need to search for best settings for the EA. This means that it's been optimized already against historical data. That's fine, but it does mean that when the markets change, and they will, this will start to fail. One failed trade with this trading robot is pretty drastic, as you will see later on. So don't forget that you should always use a regulated broker and VPS provider for the best results for all your trading. We've provided our recommended broker and VPS provider in the video description box below. Okay, moving on to the backtest. We will be running the standard backtest on the euro-dollar 30-minute time frame. We will also be running the additional checks. That's the history shift and the symbol shift to test for manipulated backtests. And this is what we see. As expected, perfect looking results in the control or standard backtest. I ran the history shift twice with different spread settings. For the first one, it was all going well until a massive loss. Likewise with the second history shift test, there were multiple large losses. When trying to run the symbol shift test, there was an error message to say that I can't run this test because I'm not using the euro-dollar. Unfortunately, as there were some clear differences between the control and history shift tests, this makes me think that there has been some manipulation of the backtest results. You can of course run these tests and judge for yourself. I created a mini course on Udemy where you can learn how to run these tests. You can check it out from the link on the screen. So a summary for this trading robot. The backtests are extremely slow. Initially I had wanted to run the backtest from 2018, but it took a whole day and it was nowhere near done. So I've been running backtests from 2020, and even then it's taken almost 3 days to run the control and 2 history shift tests. This makes me think that there is something not quite right about this. The other thing is that in the backtest you can see that each trade is actually 3 trades. For a 10k account, one trade is 0.15 lots, the second one is 0.2 and the third one is 0.5 lots. So in total that's 0.85 lot traded per 10k account. And each trade is targeting just 5 to 10 pips. However, the stop for each of these trades is a massive 325 pips. So for the 10k account, this is 0.85 lots at 325 pips, which at today's prices is $2,720 US. That's 27% of the account lost in one trade should it go pear-shaped. That's huge, and as a result, this is most definitely a dangerous trading robot, especially when just one wrong trade can do so much damage. You can see from the history shift results earlier, the one loss in the history shift chart 1 takes out all the profits that it's made in those months before, and it never recovers. In the history shift 2 chart, we can see that it never recovers from the first loss. The second loss takes 7 months to recover, only for it to take another loss shortly after. So despite a 94% win rate, this still ends up losing because each loss is so much larger than each win. And of course the history shift results versus the control backtest doesn't give me confidence that the backtest results haven't been manipulated. However, there is a live signal. It is only 2 weeks old as of this video, and it'll be good to watch this over time. So here are the links to the trading robot if you want to learn more about it. And that's it for this video. Thanks for watching. I hope you found it useful, and don't forget to subscribe. See you at our next video.